Hey guys, welcome back to Crypto Serious. Let's take a look at Bitcoin and Ethereum today. So on September 25th, after Bitcoin dumped all the way down to $108,000, the market has mostly just been in a narrow sideways range. Basically, price has been bouncing between $108,000 and $110,000 the whole day. If you connect the dots, point 1, point 2, point 3, point 4, you can actually draw a trend line. And yeah, this bullish trend line looks like it's holding up the sell-off so far. Remember what I said before? The major liquidity for longs is sitting around $107,000. Yesterday I told you to watch and see if we'd get a false breakdown there. But is it possible the market actually holds this trend line and just bottoms right here without taking that liquidity? That's the big question. Let's zoom into the chart. This trend line started from way back when Bitcoin made that W bottom structure. Then we saw a bull flag. On June 22nd, Bitcoin crashed to about $98,000, tapped this trend line, and then bounced. Later in August, I also pointed out this same line in my community. Price didn't quite touch it back then, but it still reversed higher. Now, this time, we're touching it again. So, left side thinking says, if the trend line holds and liquidity at $107,000 isn't taken out, then, a bounce here would leave a lot of traders behind because most people are just waiting for a right side confirmation. And yeah, the probability says this could be another 0.618 retracement bounce. It happened last time, it's happening again now. But for me personally, I'm not rushing in with a left side long yet. I'd rather stick to my conservative plan. Bitcoin, preferred scenario. Yesterday I said one version I'd love to see is price breaks the trend line, consolidates for a few days, then wicks down hard, takes out that $107,000 liquidity, and then we get a strong reversal. That, honestly, would be a much cleaner setup. Of course, the market doesn't have to follow my script, but that's the version I'd prefer. Bitcoin, 1-hour chart. On the 1-hour chart, we saw a little consolidation box yesterday. In the community, we talked about going long if it broke down and then recovered. But the thing is, it didn't really take out the liquidity in front. Instead, it just bounced back up toward $110,000. So right now, we still need another clear wick, another clear flush, before I'll consider this trend line a proper support for a left side long. If you just assume the line won't break, I wouldn't recommend blindly using it as your stop. Instead, maybe use a level just under the midpoint here as your invalidation. And of course, if this breaks down completely, then yeah, the next big target is still $107,000. So you need 2 layers of defense. If the trend line breaks, stop out. Then watch $107,000 for another right side long opportunity. Now, what would a real bottom look like here? First, you got to remember where the sell-off started, around $111,680. That's the level Bitcoin needs to reclaim. And honestly, Bitcoin rarely makes a clean V-shape recovery, so the more realistic path is bounce into 110,500 to 110,600, hit resistance, then form a proper W-bottom structure. That's the kind of price action I want to see. Market makers soaking up sell pressure, accumulating, and then finally breaking the trend line and reclaiming $111,680. If we get a 4-hour bullish candle closing above that zone, then yeah, that could confirm the bottom is in. At that point, you can take a right side long, using the consolidation zone as your risk management. So that's the conservative bullish plan. Yesterday, I already told you the left side level to watch, and now you know the right side plan too. Now let's flip it around. What about the bearish side? If Bitcoin rallies into 111,500 to 111,600 for the first time, I'd expect that zone to act as strong resistance. At least a short-term pullback should happen. Whether that pullback turns into another full-on crash, well, we don't know yet. But the first test of that resistance, I'd lean toward rejection. And for the shorts out there, I wouldn't chase breakdowns blindly. I'd rather short a pullback into resistance with small size. If support still holds below, then you need to be ready to stop out. because once price breaks above that line and above $111,680, the downtrend is probably over. Now, let's check Ethereum. Remember, the 0.618 retracement from bottom to top was around $3,960, which we marked as a potential bounce point. And yesterday, Ethereum did bounce, up to about $4,060. That was a clean $100 bounce right into the resistance line we drew before. So what now? Let's take a step back and look at the weekly chart. On the weekly, you can see one big green candle followed by several weeks of sideways chop. That's basically a month of accumulation. The midpoint of that range is around $3,700, so I lean toward Ethereum dipping into that zone, the yellow box on my chart. First touch there should give us another bounce. And what do we watch for on the bounce? Again, it's $4,060. That's been a key resistance zone for over a year and a half. If Ethereum reclaims $4,060 and holds, great, bullish continuation. If it breaks down again, then we need to see if it can quickly recover above $4,060. Sometimes daily candles are messy, so what's a cleaner way to confirm? Look at $4,160. If we see a strong close above that, with a short upper wick, then yeah, that's probably another golden pit setup. What do I mean by golden pit? It's when Ethereum dips below support, tricks everyone into shorting, and then reclaims it for a strong rally. It's done this so many times before, and usually after reclaiming, it still gives you a couple days to build your long before the breakout. So we don't need to rush. If Ethereum truly reclaims $4,060 to $4,160, there's still time to position. But if it fails and breaks below $3,960 again, then I'll flip bearish. Alright guys, that's it for today's update. If you're new here, make sure to subscribe to Crypto Serious and follow me on Twitter for more real-time updates. Catch you in the next one.